What is up, everybody, and welcome back to the Everything Crypto YouTube channel, where we keep you up to speed on the most important news moving the crypto markets. Now, we are back today with another jam-packed daily market update, as we have seen Bitcoin and Ethereum finally go on their first correction here since the New Year's rally has begun. And we're going to talk about some key levels that I am looking for on the charts. Then we got to talk about Quant, as whale stats is showing us that the biggest Ethereum whales in the world are loading up their Quant. And last but not least, we got to talk about Binance, who has partnered up with MasterCard to launch a Crypto.com Visa in Brazil, just a couple of months after Crypto.com actually secured their payments institution license. So without further ado, it is time to sit back, relax, grab that morning cup of joe, and enjoy the show. Happy Tuesday, everyone. If you've not yet hit that sub, like, and notification bell and join the Everything Crypto squad, please consider doing so. And with that, we're going to hop right in here with the question of the day. And today's question is, would you rather see Bitcoin at 20K or Ethereum at 1.4K? Let me know in the YouTube comments down below. And by that, I actually meant, let me correct this because I want this to be a little more clear. Would you rather buy Bitcoin at 20K or Ethereum at 1.4K? Let me know down below. I do believe that this is where the prices are headed in the coming weeks, as we do sort of complete this correction on this year-to-date rally, and we're going to break that down right now as we do hop into the charts. So the reason that I am looking for both 20K on Bitcoin and 1.4K on Ethereum, first and foremost, is that is in fact the previous bull run peak, right? So Bitcoin did peak at 20K back here in 2018, and likewise Ethereum peaked at 1400 back here in 2018 as well of January. So I do believe that both of these levels will act as levels of support here as they do kind of make their way back to the downside. And keep in mind that, just for some perspective, Bitcoin started the year at, I think it was like 16.5K, and Ether started the year at 1.2K. So even for them to pull back to these levels, I mean, they're still up on a year-to-date basis. And another technical indicator here that is telling me Bitcoin is most likely going to pull back to 20K is the bull market support band, which does actually sit here at the top level of this band at 20.2K. So the fact that this is the 2018 all-time high, as well as the top of the bull market support band, which does act as a very good indicator for when Bitcoin is in bullish and bearish sentiment periods. I do believe that 20K is going to be a magnet for the price action. And really, the first indicator here to me that would kind of signal that we were not going to extend this rally is the fact that we could not even go ahead and retest the 200-week moving average here, sitting at 24.6K. This is personally what I was looking for here on the chart, as if we take a look at the 200-week moving average heat map, you can clearly see that over long periods of time, the 200-week MA has historically been one of the strongest levels of support for Bitcoin and a really big magnet for the price action. You can see here that it bounced off it in 2011 and began a major rally once again here in 2015 before its major rally, and then once again here in the 2019 bear market before ripping all the way to new all-time highs. Actually, even in between that, we saw Bitcoin once again hit the 200-week moving average in 2020 during the kind of freak sell-off that nobody was expecting due to some global events, and then Bitcoin once again bounced off that level and hit a new all-time high. So you can see here, based on this heat map, that this previous bear market is pretty much the first one in history where Bitcoin not only broke below the 200-week MA, but has now also spent a sustained period of time below it. And clearly, over long periods of time, it does act as sort of a magnet for the price action of Bitcoin. So I did expect that Bitcoin was going to, in fact, creep its way back up to that 200-week moving average in the coming weeks. We actually topped out here at about just around 24K. So not quite getting there, but pretty close. And it doesn't appear now that Bitcoin is going to make its way back to the downside after getting rejected here on one weekly candle and forming the second weekly candle right now. So for Bitcoin, I am looking for that 20K level as a sort of pullback zone. And then as for Ethereum here, once again, I said I'm looking for 1400, and you can see here that this is also where the bull market support band is setting in between 1350 and 1450. So you put Ether dead smack in the middle of that, where the 200-week moving average sits at 1394. And once again, a lot of data does suggest here to me that both of these cryptos are going to pull back to their previous bull run all-time highs. Now, if they can in fact validate these levels of support and chop sideways here for a bit, I do think that actually would do a lot to improve sentiment, and breaking below them would actually be pretty negative for the market sentiment. But if they can validate them and show that bulls are beginning to step in near previous bull run all-time highs, once again, I do think that will sort of act as a level for Bitcoin and Ether to just chop sideways after this year. And we are still sticking by the thesis that although I am expecting a green year for the crypto markets, I'm not actually expecting any big movements until 2024 in line with the next Bitcoin halving. Now, we have a very hefty week ahead here, and the number one thing that I am looking for tomorrow is Wednesday, the FOMC meeting minutes. It is estimated to be a 25 basis point hike. I'm pretty sure that over 90% of people are pricing in a 25 basis point hike. I don't think the Fed is going to surprise us and do a 50 basis point hike. If they did, that would absolutely send Bitcoin and Ether probably below 20K. But if they do the 25 basis point hike, I think a lot more of it is going to depend on the Powell press conference here. So we're going to have to see what he says about that. And then we also have Facebook earnings at the bell close there, so 4 p.m. on Wednesday. On Thursday, we have the Bank of England rate decision as well as the European Central Bank rate hike decision, both of which are estimated to do 50 basis point hikes. And then we have Apple, Alphabet, and Microsoft earnings on Thursday after the bell. And then Friday, they have the unemployment rate and non-farm payroll. So a very busy week here in the markets. Definitely be careful if you are trying to trade this week, because I do think that this news could definitely send us on some unexpected volatility one way or the other. Now, we're going to hop into the Bitcoin and Ethereum news and on-chain data. And the biggest piece of news here for Bitcoin is that the hash rate has once again today hit a new all-time high. So going back over here to blockchain.com and taking a look at the total hash rate, I mean, look at this thing going absolutely parabolic. And the hash rate here is something we have been covering on the channel pretty frequently throughout the bear market, because I have noticed a pretty big divergence between the price action of Bitcoin and the total hash rate. Effectively, as the price of Bitcoin has been declining throughout majority of 2022, the hash rate has done nothing but continue to rip to new all-time highs. We have seen some slight pullbacks along the way, but really the last major pullback we saw on the hash rate here was on that brief crash we saw in 2021, and this was in correlation with China's ban on Bitcoin mining that did happen at the time. And you can see here that after the ban on mining in China began in May, that it did not even take until the new year for these Bitcoin miners to replace all of the ones that were forced to shut off their equipment, as the hash rate did once again hit a new all-time high here in December of 2021. Now, 2021 was a pretty busy year for the crypto markets, as this is also where Bitcoin did actually hit that price peak of just over 69K, and it did start that decline that we saw throughout the majority of last year. And you'll notice here that even as the price of Bitcoin had been declining throughout the official beginning of the bear market, that the hash rate continued to rally with some slight pullbacks along the way, but nevertheless really just continuing to make its way to those new all-time highs. And we have now once again seen the Bitcoin hash rate hit a fresh all-time high today. So what this shows us is that even in the face of declining prices for Bitcoin, even as miners were getting crushed, that more miners than ever are fighting to validate their piece of the network to get that Bitcoin as a block reward. This comes at a time where miner revenue had actually been shot back down to 2020 levels here based on the rising cost of energy, as well as the lowering price of Bitcoin versus the US dollar, making each Bitcoin they did mine more expensive to generate, as well as less profitable when converted back to USD. We also have the network difficulty here once again at all-time highs. I would expect this to also print a new all-time high at the next difficulty adjustment. And this shows you guys that miners do not care about the price of Bitcoin right now. They see the long-term potential of this asset class, and this is definitely a bullish outlook for the long-term prospects of Bitcoin and the mining industry as a whole. Now, the other thing I do want to point your guys' attention to here is the chart on Quant that actually shows Bitcoin miner reserves. And we were noticing here, we mentioned it in a couple of videos, how as the price of Bitcoin was going up, that miners were actually taking profit on their Bitcoin as they were back in the money on each Bitcoin being mined. And here's the thing, this could be taken as a bearish signal, but personally, I saw this as a bullish signal for the mining industry, and yet again, another sign of maturation, because a big problem the Bitcoin miners had seen throughout 2022, a big reason that we did see some minor capitulation, some of them filing for Chapter 11 bankruptcy, some of them just full on shutting off their equipment because they cannot continue to operate, and it actually made more sense for them to shut off their equipment to save money. A big reason we saw this is because throughout the bull market, a lot of them took on a ton of debt and financing to get more mining rigs, to mine more of that Bitcoin, and then boom, all of a sudden you have the price of Bitcoin declining, energy costs are rising, and as well as interest rates, and these these miners were in debt as they pretty much took out all this debt the previous year to go ahead and speed up their operations. So what this shows you guys, I think, is that Bitcoin miners are now looking to sustain themselves throughout this year. And I think it's a bullish sign that when they do become more profitable on their Bitcoin, they are in fact taking profits, converting it to US dollars, and ensuring that they do have sufficient funds to continue operating. So once again, something that can be perceived as bearish, but personally, I see this as pretty bullish for the mining industry as a whole, especially given that this will help them avoid exactly what did land this industry in some hot water throughout this previous bear market. And now, before we actually hop into the Quant news here, I do want to take a look at one very important piece of on-chain data for Ethereum, and that is in fact the supply change. So in the past 137 days, Ether has seen a negative issuance of 4,611 Ether, and more impressively here, since January 2nd, which did kind of mark the beginning of this rally, we actually went from a net positive issuance of 5,000 Ethereum, now down to a net negative issuance of 4,611, effectively meaning that in the past 28 days, there has been 9.6k Ethereum removed from the float and burned. Now, with a current supply of 120.5 mil, keep in mind that had Ethereum stayed under proof of work, this would have instead been a positive issuance of 1.6 million, equivalent to over 1% of the entire Ethereum float. I think this does go to show you guys the power of the new Ethereum tokenomics under proof of stake, and this is in the middle of a bear market. What will this look like in a bull run with more sustained buying, more sustained on-chain activity, more FOMO? I think that Ether is going to become a lot more deflationary, a lot faster than a lot of people think, and this is personally why Ethereum is still my largest position in the portfolio, with Bitcoin as a close second. I do think this is going to remain one of the best performing layer ones in the following bull run, and I think it will remain the king of DeFi for at least the next bull run, and probably the bull run even after that. I think it's going to take a lot for any cryptocurrency to dethrone Ethereum, and so far the ETH Foundation has shown that Ethereum does deserve to remain on top. So speaking of Ethereum here, I do want to hop into my favorite ERC20 altcoin, and that is none other than Quant. You guys know that we were pounding the buy button on this project throughout the bear market here in May, June, July, just really in this double-digit range. I even love me some Quant at $100, and the reason being is because of the fundamentals and the tokenomics of this project, which in my opinion, I have not seen any other altcoin with similar tokenomics and utility that this project does have to offer. Now, obviously, Quant did turn a lot of heads here in the bear market as it rallied from a low of $43 all the way up to $228, and then even after pulling back here over 50% from $228 back down to $100. We have seen some very nice rallies here for Quant off of the 50-day moving average. Once from $100 up to $120, then again from $100 up to $125, and more recently here a nice move from $100 all the way up to $160. So a 20, a 25%, and a 60% move respectively. Now Quant does appear to be making its way back to the downside, and if I actually do put the lines back on the chart here, it does look like the most likely area Quant wants to test is that 130 level. You guys can see that $130 is also where the bull market support band sits. We have the 100-day moving average sitting at 127. So it does look very likely to me personally that if this market pullback continues, that Quant is going to make its way down to 130, and then below that we have a ton of technical support levels lining up here at 120, including the 50 and 200-day, as well as the bottom of the bull market support band. Now, something that has caught my attention with Quant recently is if I actually take a look at whalestats.com here. So this is a tool that I have used on the channel before. I haven't featured it for quite a while. Now, something that has caught my attention here when it does come to Quant on whalestats.com, and first of all, something has caught my attention here when it comes to Quant on whalestats.com. This is a tool that I have featured on the channel previously. I have not actually used it here on the channel for quite a while, but what this effectively allows you to do is analyze the top whale wallets on multiple chains. So what we can see here is we can actually take a look at what the top Ethereum whales are trading and holding. Now, in terms of trades, taking a look at their top 10 by trading volume, their top 10 most sold tokens, and their top 10 most purchased tokens. And what we are looking at here is their top purchased tokens in the past 24 hours. And we do in fact have Quant sitting at spot number 8. It is behind some of these projects like Matic, Uniswap, Shiba Inu, and Wrapped Ethereum. So in the past 24 hours, whales have been loving their Quant, as it currently is sitting in 8th place here in terms of the most purchased token by the top 100 Ethereum whales. And one other statistic that I do want to point your guys' attention towards here is the actual top whale holdings. And you can see here they do in fact have a heat map of the total holdings of all tokens, excluding Ethereum this time. So let's take a look at the history here in terms of the top 10 holdings, and this chart does feature Ethereum as well as derivatives like staked Ethereum and wrapped Ethereum. And you guys can see that Quant is sitting here in 14th place amongst all the top 100 Ethereum wallets, with them having an average quantity of about 3.9k Quant in their wallets. So from the top 100 Ethereum whales, Quant is the 14th most popular. And if we actually go ahead and remove stablecoins here from the equation, that would push Quant up to 11th place. If we removed Ethereum and its derivatives here, that would push Quant up another 3 spots to 8th place. So Quant is definitely one of the favorite projects here amongst the whales, squeezing its way into the top 15 amongst some other projects here like Mana, Matic, Shiba Inu, and honestly, a lot of these projects I just have not heard of. But the fact that Quant has caught their attention here, Chainlink as well, right? I mean, the fact that Quant has found its way into the top 15, I think does speak a lot to what these whales are keeping an eye on for the next bull run. I do still think that Quant is said to be a massive beneficiary of a lot of the themes that will emerge in the next bull run. The first of these themes being central bank digital currencies, CBDCs. I think these are definitely going to be coming over the next couple of years, and Quant does in fact have the ability to help these companies, these government institutions, actually create central bank digital currencies here through the Quant Overledger. We have also discussed previously the Quant CEO's connections to the Federal Reserve, the Digital Pound Foundation, as well as some indirect connections between Quant partners like Oracle and the largest European bank, HSBC. So you can see here right on their website, they do list digital currencies. Now, another thing that we have discussed here is in fact tokenization, and that is something else the Overledger does offer, is the ability to actually take physical products and tokenize them and make them digital versions on the blockchain. And the last and third thing here that we have discussed is interoperability, and the Quant Overledger Integrate is their Gateway's core API, enabling you to create blockchain applications that will run on any chain faster and cheaper. So I really do think that Quant and a lot of what they are offering with their Overledger technology is going to play a big role in a lot of key themes in the next bull run, and that is why this is personally my favorite altcoin here on the channel, and one that I do think is also going to be a top performer. Now, to put things into perspective, I mean, we love the utility, but we also do love the tokenomics of this project. And tokenomics are definitely important to consider when it does come to actual return on your investment. So when it comes to Quant here, we can see that Quant does in fact have a total supply of 14.6 million. That makes it about 33% more scarce than Bitcoin with a 21 million total supply. And additionally, we can see here that if Quant actually had Bitcoin's market cap at the current moment of 440 bill, that one Quant would be worth 30.3k, while Bitcoin at the same prices is currently trading at, what level is Bitcoin trading at right now? Well, Bitcoin at this current market cap is trading at 22.7k. So that, guys, that goes to show you guys that if Quant and Bitcoin had the same market cap, that one Quant would actually be worth more than one Bitcoin in terms of physical dollars, or digital dollars actually, just because of its scarcity. So you factor in Quant's utility as well as the tokenomics, and that is why, once again, this is an altcoin that I am extremely bullish on for the next bull run. Now, I do want to wrap this up with some centralized exchange news here, as Binance has partnered up with MasterCard to launch a prepaid crypto card in Brazil. This card will allow payments with 13 cryptocurrencies, including Bitcoin, Ether, and USD. So it says here that they will charge a 0.9% fee per transaction involving crypto, adding that it will offer up to 8% in cashback with crypto and allow ATM withdrawals without fees. The product is now in a testing phase and will be widely available in the coming weeks. Brazil, they say, is an extremely relevant market for Binance, and we will continue to invest in new services for local users, as well as contribute to the development of blockchain and the crypto ecosystem in the country. It is also worth noting that Brazil is one of Binance's top 10 markets globally, according to their post. Now, this does ring a bell here, as we actually saw that Crypto.com announced their Visa cards would be available in Brazil back in November 11th of 2021. So Crypto.com has already had their visas here in Brazil for just about a year and a quarter, even just under a year and a half when compared to Binance. And more recently, we actually saw on December 15th of 2022 that they did secure their payment institution license in Brazil. So this latest milestone is strengthening their Latin American regulatory compliance and presence for Crypto.com. And this license will allow Crypto.com to continue offering regulated fiat wallet services for customers in Brazil. CEO Chris Marzalek says here that Brazil and the entire Latin American market is a significant region in the pursuit of our vision of cryptocurrency in every single wallet. We are incredibly proud to secure the license in Brazil, allowing us to lead a safe, secure, and compliant platform. We look forward to continuing working with regulators and authorities throughout the region in advancing cryptocurrency and blockchain technology. And it was recently discovered in a recent study by Chainalysis, a leading crypto analytics firm, that Brazil did rank 7th globally in terms of the year's crypto index. So Latin America is a major driver in crypto adoption, and regulators have been playing a key role to foster this. This is an exciting step in Crypto.com's journey in Brazil and Latin America, with much more to come, according to their general manager and head of legal Latin America of the company. So you can see here that both Binance and Crypto.com are looking to continue their expansion into Brazil. Binance recently announcing the launch of their Visa in partnership with MasterCard. Crypto.com already having their Visa here, as well as securing that payment institution license in late last year. And these moves from both Binance and Crypto.com come at a time when I believe they are really looking to get as much regulatory approval and operate in as many regions as possible to just benefit from the next bull market and the next wave of global crypto users. I think that a strategy like this and the companies that do continue to build throughout the bear market is going to really make the difference between the top and the mid-tier exchanges in the next bull run. We can see here that Binance has a massive lead over the industry with $72.21 billion worth of customer assets. Then we have Bitfinex in second place with $7.95 billion in customer assets. So just under 90% less in terms of the TVL that Binance actually has. OKX in third place with $77.82 billion in customer assets, and Crypto.com in fourth with $3.59 billion worth of TVL. So Binance is still clearly the industry leader here in terms of customer assets. Crypto.com has sort of maintained their position in the top 5 of TVL. You can take a look at Huobi Exchange coming in 5th place here with $3.24 billion, and then KuCoin in 6th place with $2.63 billion. So Crypto.com is just under $1 billion ahead of KuCoin in terms of that total value locked. And I would expect that as Crypto.com does continue to become one of the most regulated and trusted crypto exchanges globally, that it will maintain this position in the top 5. I think there is a lot of room for Crypto.com to grow in terms of that customer assets on the platform. And if they can really go ahead and spread awareness for CROcoin and make it incentivizing to hold the CROcoin for people that are using the platform through things like the Crypto Pay, the Crypto.com Visa program, that this could also translate to very good things for the price appreciation of CROcoin itself. So without further ado, I hope you guys did enjoy the content in today's video. You know what to do. If you made it all the way to the end, you are an absolute champion. Let me know in the YouTube comments down below and claim that champion status. I hope you are all having an amazing Tuesday, and I hope to catch you in the next one. Peace out for now.